also health. So that way is actually it is bit vast portion, but miscellaneous and liability have always been very simple products. Especially this is so with PA and miscellaneous, because these are the subjects practically we all work on these lines when we are working in any insurance setup and insurance company. Miscellaneous lines of business deal predominantly with all our daily walks of life, whatever we come across, say our own household, shops, shopkeeper insurance, human life, personal accident line of business. Then when banks and jewelers shops, it is bankers indemnity and jewelers block policies. Then going to money insurance and all risk insurance for our valuables. So all these products are nothing different than what we use or we need in our day-to-day life. So it is rather very easy. You just give a one reading and retaining all these things in your mind is very easy when it is miscellaneous line of business. Liability is nothing different but a common sense thing, or what we very commonly understand that it is needed to be done, not needed to be done, and otherwise how we would be held liable. So those things are covered under liability line of insurance. Coming to exam perspective, those who have been miscellaneous underwriters as such, or preparing the policies in your offices, mind you, what you have to remember while giving the exam is what you have to write is only what is written in the book of III, or what is written in the clauses of the respective policy. In practice, actually, miscellaneous underwriters are known to be or expected to be most flexible people. And when it comes to business, we really try accommodating practically everything, and we try bringing the risk onto our books by fitting it into some one of the products, because in miscellaneous there are more than 150 products as such actually. And at least somewhere we try to accommodate it and bring the business and premium onto our books. We try to rather provide the required protection to our clients by using these very varied products of miscellaneous. Coming to examination, now I will run through all the slides which I have prepared on the main products of miscellaneous and liability lines. It is practically not possible to cover each and everything, but I believe what I have covered in this slideshow would definitely help you revise what all you have done so far, and it will help you a lot in the examination. I have put in all my effort to try include all the clause and conditions of the respective product in this presentation. So let us move to personal accident policy. Personal accident policy is a PA, is a pay fixed compensation. This vocabulary is important to remember because personal accident covers human life. A human life is really invaluable. It is just not possible to fix a particular sum insured or assign a particular value to any human being. And that is why we have to decide on what sum insured can be given to any particular person. Then what can be done is we link it to the income of that particular person, who is going to be the insured person under the policy, and in multiples of that income from active gainful employment, we decide the sum insured per person. Of course, even if we link it to the pay of the particular person, the value of the person just can't be compensated. Our effort is just to compensate for the financial inconvenience that is caused to the family. And it still cannot fully indemnify the loss that has been caused to the dependents or beneficiaries of the policy. What is covered under personal accident policy is death and disablement from accidental bodily injury. that bodily injury has to be solely and directly caused by accident. Nothing else, sickness, illness, infections, all those things also cause injury or damage to your body, but that is not covered under personal accident policy. For a claim to be considered under PA, it has to be accidental bodily injury causing death or a disablement of the person. And simultaneously, you have to remember one more thing, any other cause is contributing, means the event or accident not occurred and claim would not be covered under the policy. There are case studies in the III books. If you have read it, you can really understand it in a better way. Just to cite an example, when suppose a person is traveling in a cart and he is already having some heart disease. He falls down from the moving cart and he lies there for some time. Nobody is able to identify exactly what happened and how he died. He is found dead later on. There is no apparent any bodily injury on the body, and it is not possible to go to the root cause. In that case, claim wouldn't be considered. But if it is a direct cause that has caused wound on his head, there is bleeding and he dies, then cause and effect relationship is identified, then the claim would become payable under the policy. So accidental bodily injury is the main trigger. Injury can be external or internal, both are covered. Cause has to be external. If the person, going ahead with the same example, if the person falls down from a moving cart, he gets brain hemorrhage and dies, then maybe apparently there wouldn't be any wound on his head or the injury cannot be visible, but it has led to the death because of the accident that occurred, then the claim would become payable. So injury can be external or internal, but accidental means have to be external, visible. Definition of accident is something that is caused by sudden and unexpected, visible, external, violent means. So these four elements have to be present for any event to be classified as accident. The event has to be sudden and unexpected. It has to be caused by visible means, external means, and violent means. Then only it can be classified as an accident. There has been question on this that all these four elements would be given, two elements would be given, something else would be mingled in all of four, one would be dropped. So these four words you have to remember completely. Then coming to application of various principles of insurance. What are the principles of insurance? Utmost good faith. Cover is provided based on just the proposal form and no medical tests are taken. So we go we make a decision on acceptance of the risk and rating of the risk just based on the proposal form. So utmost good faith continues. Duty of disclosure, premium rate is charged based on the occupation or any change if not informed, it is, and if it is material, then duty of disclosure is breached. Premium rate depends on occupation. There are classification of occupation, risk group 1, 2, 3. I have it in the later slide. And depending on that, premium rates are fixed. And accordingly, we charge the premium to the person insured. Principle of indemnity is not applicable to personal accident line of business. PA is a benefit policy. If there are more than one policy, multiple policies covering the same insured person, in the event of permanent total disablement or a death of the person, all policies put together, that total sum insured would be paid to the insured, or rather his beneficiaries, rather his family members who have been dependent on him or the named nominee under the policy. What is the measure of indemnity? Measure of indemnity is decided by linking of capital sum insured to income insured from income insured of the person from active gainful employment. So this word active gainful employment is very much necessary. What is his investment income will continue even after the death of the person, and so that is not counted while deciding the sum insured under the policy. There is medical extension cover. However, this is subject to strict principle of indemnity because it is just the reimbursement of what amount he has spent in treating the accidental injury. So there is no benefit policy element is considered, except what is spent is reimbursed. However, weekly compensation under several policies is paid on proportionate policy or on proportionate basis. That is, capital sum insured death or disablement would be paid by combining all policies sum insured, medical extension, exact reimbursement of the medical expenses, and weekly compensation. Several policies in existent, all would proportionately pay that weekly compensation. Principle of subrogation is not applicable to personal accident policy. Principle of contribution is not applicable to the personal accident policy. It is a benefit policy. Principle of insurable interest. Relatives do have insurable interest in the insured person's life, so they can take the policy. Creditor has insurable interest in the debtor's life, because if the later dies, the repayment of loan becomes difficult, and that is why it is allowed to take the policy in the by the creditor in the name of the covering the debtor. Employer-employee relationship PA cover is a welfare measure by the employer. There is no direct insurable interest in the life of the employee by the employer, but it is taken as a welfare measure, sort of added perquisite. What is the basic cover under PA policy? Age limit is 5 to 70 years, maximum up to 80 years with loading and medical examination. It is not actually test as such. What we call for is just the physical fitness certificate from his family doctor or normal physician. And there is no test required, but we see that the person is fit. Then cover is for a death, permanent total disablement, that is PTD, permanent partial disablement, that is PPD, and temporary total disablement, that is temporarily the person is stopped from engaging in his normal occupation in which he was engaging. Here what you have to remember, jumbling is either the disablement has to be permanent or the period has to be permanent. Both are half, then the policy would not trigger. Period of temporary total disablement can be in days, weeks, months, or years. It need not necessarily, though we call it as weekly compensation, there is no condition that it has to be minimum 1 full week. Compensation types are for a death or PTD, capital sum insured is paid. For permanent partial disablement, percentage of capital sum insured is paid. And temporary total disablement, 1% of capital sum insured, subject to maximum fixed amount, that is 5,000, 7,000, 10,000, that is paid under the policy. What are the free benefits to PA? Carriage of dead body, education fund, that is after the death of the earning member, the children up to 2 numbers and up to age of 25 are allowed to continue taking education, and those fees are paid. Education fund is paid as a lump sum also. Cumulative bonus, 5% of each claim-free renewal, subject to the renewal being done in 30 days. Cumulative bonus applies only to capital benefits. That is, total sum insured, TSI is paid. See, TSI is what? Capital sum insured, that is what we calculate as 72 times of income, plus the cumulative bonus, that becomes the total sum insured. So total sum insured becomes payable in the event of death and permanent total disablement. In partial disablement, percentage is applied. Then family discount is not called a free benefit. This one has to be very particular about remembering this, because family discount is the discount allowed in the premium, and it is not something which is a free benefit passed on in the event of the claim. So there has been a question that they will give you 2-3 alternatives, what are free benefits, and one of them will be family discount. Family discount is not a free benefit. Group PA, there is no cumulative benefit, cumulative bonus concept, and no education fund. Remember, no sum payable under this policy shall carry any interest. That is written in the clause itself. What are the extensions under PA policy? Medical expenses extension, this is very commonly demanded also and given also. The policy can be extended to cover medical expenses incurred by the insured in connection with the accidental injury, Additional premium is to be collected for allowing this extension, and hospitalization is not a condition. War risk extension for Indian personnel or experts working in foreign countries on civilian duties. Cover is allowed. Cover during normal peacetime, 50% extra premium is charged on the normal applicable rate. And cover during warlike conditions, premium of 150% extra is charged over normal rate. What are the special features of PA? Cover is for 24 hours and on worldwide basis. By default, this is cover which is 24 hours and worldwide basis unless some specifically demanded cover is tailor-made and given. Travel as a passenger in a licensed standard type of aircraft is automatically covered. That is the air travel what we laymen do normally in the airlines which are standard type of airlines running on the approved routes. That is automatically covered under personal accident policy. What is the classification of risk? There are three risk groups: normal, medium, and high. Those who are engaging in administrative work, table work, they are normal. Who are engaging in little hazardous type, it is medium. And high is those who are engaging in mining and such other work which poses more risk. What is family package cover? Family package cover covers spouse and dependent children. If the spouse is non-working, 50% of capital sum insured of the earning spouse is subject to maximum of a specified amount can be given. If the spouse is working, then her cover will go as per her income. Dependent children, 25% of capital sum insured
Ma'am,
of the
for
earning
working
parent
spouse,
subject to.
ma'am, for working spouse, we will not give any cover. Huh?
Pardon me?
For working spouse, we don't give any cover for under family package cover.
100%
For
CSI.
working spouse, we will give the cover as per her income. Means even more than 50% can be allowed.
For working
It
spouse.
will be covered under family package only, but sum insured need not be restricted to 50%.
Ma'am, I just have one fundamental doubt, ma'am. Non-working spouse and working spouse, whether it is the person who is the insured or his spouse or her spouse, ma'am.
I did not get you.
Ma'am, we are telling no non-working spouse. So if the insured is a man, his wife is working or not, we should see.
If family package cover is required, and then there will be two options. Either the wife would be working or would not be working. The
Okay.
main insured person is the man. If the
Okay.
main insured person is a woman, it would be the other way. So I have not mentioned wife or husband, I have mentioned spouse.
Okay. Okay, ma'am.
Have I satisfied you or
No, so if the husband dies, the non-working spouse will get 50% of CSI. Is that what that mean?
no, ma'am. If no cover
It
for
is for
non-working
coverage.
spouse is 50%. So if non-working spouse dies, only 50% of capital sum insured would be paid.
Okay,
Because
so
that
this
is
it is
her
about
sum
the
insured.
spouse.
If
Okay,
the
the death is
insured
for the
person
spouse.
dies, who is earning, full sum insured would be paid.
Okay, I got it, madam. I got it.
And discount is given on gross premium. What are the other types of cover under PA? There is an option to have on-duty cover. Some employers try taking only on-duty cover in order to save on premium, because what we charge is 75% of actual total premium. Cover applies to accidents arising out of and in the course of employment only. Off-duty cover is when it is taken, generally when the employer has already taken on-duty cover, the insured persons prefer personally taking off-duty cover, and 50% of total premium would be charged to them. GP excluding death cover, yes, it is possible. If a group life policy covering death benefit is existent for the same group, group PA is for a group of more than 100 persons, 100 persons and above, and discount based on premium applicable to death cover is allowed. So this is something which might sound strange, but it is available. Now coming to provisions under PA policy. Payment of a claim can only be under one of the items or contingencies for the same period. For same accident, only one type of claim can be paid. That is, if a person becomes disabled and he feels that means people feel that he is going to be totally disabled permanently, and they opt for a PTD, then subsequently, unfortunately, even if the death occurs, again we will not pay the full sum insured or the remaining sum insured. Only once they have to exercise the option under which item or under which table, under which item they want to claim. Policy becomes inoperative once a claim is settled under the subclauses of death and PTD. No further claim can be admitted. This is very obvious because once the person is dead, the cover should cease. There is no question of any further claims arising also. In the event of more than one claim during the same period, insurer's liability is limited to capital sum insured plus CB. Under no circumstances, the insurer would pay more than the capital sum insured plus CB, that is total sum insured under the policy. Payment of equally compensation only on arriving at the amount payable ascertained and agreed. That is, only after the temporary total disablement is completed, the treating doctor has certified that it was for so many days. Then for those many days, the lump sum would be calculated based on the amount payable, and it is one lump sum that is paid as a claim amount. What are the exclusions under
Ma'am,
PA policy?
Yes, ma'am.
essentially, there is no reinstatement concept in PA policy. Huh? There is no reinstatement concept, madam. Like if they pay the claim, if we reinstate, it's not
There is
there in
no
PA.
reinstatement of sum insured.
Okay, madam.
Hello, ma'am.
Ma'am, I have a question. Under table
Yeah.
A, B, C, and D, what are the sum insureds to be considered? Like for
Under
table
table
D,
A?
whether the base sum insured plus CB is taken as sum insured.
In
If
the
it is
event
so, then
of
what is the treatment? Sorry.
in the event of death, total sum insured is
Suppose I'm
considered.
just giving an example, ma'am. Like suppose a person dies out of an accident, so in that case he will be paid his base sum insured plus CB. Am I right,
Yes.
ma'am? So what happens in case of table A benefits? Whether only the base sum insured is taken or cumulative bonus is also added to it?
For TTD, only CSI is considered. Capital sum
CSI.
insured is considered. Base sum insured.
CB is not considered.
No.
Okay, okay. Thank you so much, ma'am.
Hello, ma'am.
What are the exclusions under PA policy? Intent? Yes.
If PTD claim is paid under the policy, then death claim will not be payable.
Pardon me?
If PTD claim under the policy is being paid,
Hmm.
then the person dies,
Hmm.
then the death claim will not be payable.
If it will not be payable, he has to exercise the option only once. Whether he wants to charge temporary see, for temporary total disablement, the wound should not be so grievous that it will lead to the death within 12 months. So
Okay,
after
ma'am.
TTD, when we pay TTD, only after he becomes fit, that is why that clause is there, only after he becomes fit and doctor certifies that now he is fit and temporary total disablement has
No,
ended,
no, ma'am. Not
then we pay
temporary,
the claim.
not TTD. I'm telling TTD, permanent total disability.
Permanent partial disablement.
Yeah, exactly.
Permanent
Permanent
total
partial.
disablement.
Yeah, permanent. In case of permanent total disable, the person is permanently disabled, like say paralysis or something. Then afterwards he dies. So what will be the fate in that case?
No, what we have paid, the policy should stop there. One accident, one benefit payable.
Okay, ma'am. Okay.
Ma'am, is there any restriction on the number of weeks that we will be paying weekly benefits?
Is there any restriction on?
Weekly benefits means the number of weeks that we'll be paying, maximum numbers up to which the weekly benefits
As long
104.
as sum insured is available,
104.
maximum 100 weeks.
104 or 100?
Earlier it was 104. Later on it has been modified to 100.
Okay, thank you.
What are the exclusions under permanent personal accident policy? Is intentional self-injury, suicide, or attempted suicide. In that case, claim wouldn't be entertained under the policy. Injury whilst under the influence of intoxicating liquor or drugs, whilst engaging in aviation or ballooning, such type of hazardous activities, while traveling in, mounting into, or dismounting from balloon or aircraft other than as a passenger, directly or indirectly caused by venereal diseases or insanity, arising or resulting from insured committing any breach of law with criminal intent. From service in armed forces, here arising or resulting from breach of law with criminal intent. The very common example you all may have heard, that a thief is snatching a chain of a person standing on the platform and running, jumping onto the tracks and running. A policeman saws and chases him. The train comes and both meet with an accident and die. The claim for the thief, even though he is having personal accident policy, wouldn't be paid because he was engaging in crime when he was crossing the with the criminal intent. He was taking away the chain and crossing the line. And for a policeman, it would be paid because even though he is actually crossing the line itself is not legally allowable, he was chasing the thief, he was discharging his duty, the claim would become payable. So that last part, with criminal intent, breach of law has occurred or not, that is important. In the case of policeman, breach of law has not occurred with criminal intent. He was discharging his duties, so PF would pay the claim. Then exclusion under PA policy is if the insured person is from service in armed forces, resulting directly or indirectly from childbirth or pregnancy. This would not classify as an accidental death. And war and kindred perils, nuclear risk, this is a very common exclusion under the policy. Coming to Saral Suraksha Bima Yojana, this is a policy launched by IRDA, and all four companies have come out with it with their own name, that is New India Saral Suraksha, like that. The base cover under Saral Suraksha Bima policy is death, PTD, and permanent partial disablement. Death claim in the event of disappearance is payable against obligatory guarantee and is refundable if the person is found alive subsequently. This is peculiar to this policy. Then there are optional covers also. Base cover is death, PTD, and PPD, that is death, permanent total disablement, and partial disablement is base cover, and optional cover is weekly benefit, medical expenses, and education grant. So here there is small difference. Weekly benefit is not a part of base cover under Saral Suraksha Bima policy. TTD, what is the TTD benefit under Saral Suraksha Bima if it is opted as add-on? Minimum duration of 4 consecutive days is required, then only it would become payable. Payment for a day 1 of accident, maximum 100 weeks is payable. Even though 4 days have to occur, it is not that for first 4 days payment wouldn't be done. Temporary total disablement to start within 30 days of the accident, it cannot be later. TTD payable on quarterly settlement basis. This is different here. There we arrive at a one lump sum and then pay, and here we do not pay for a shorter interval. Here it is allowed to pay quarterly settlement or shorter interval if the disablement ends. Earlier, we will not make him wait till the end of the quarter. So this is a peculiar feature under Saral Suraksha Bima. What are the medical expenses under Saral Suraksha Bima policy? Hospitalization expenses incurred due to accidental bodily injury. Treated in India only is the cover. PI is worldwide cover. Sum insured is 10% of base. Sum insured is fixed medical expenses available. Hospitalization minimum 24 hours, or for OPD treatments it is not required. Expenses on the line of medical policy are classified. That Ayush treatment is covered without any sublimit. Dental treatment, plastic surgery, daycare treatment expenses are considered. Ambulance expenses up to 2,000 per hospitalization are payable. There is annexure B. Remember these words. There is annexure B to the policy which bifurcates various medical expenses into list 1, 2, 3, 4 depending on their nature of for which they are incurred. However, they are subsumed under medical expenses. These are not to be added. The total medical expenses would stop at 10% of the base sum insured. So
Can you
this
just
is a
show the
peculiar
previous
feature.
slide? Previous slide.
Pardon?
Can you just show the previous slide?
TTD benefit under Saral Suraksha or still
Okay.
previous
Oh,
one?
no. Same one. Thank you, ma'am. That's it. I just wanted to take.
Ma'am, is animal bite covered or is it an exclusion?
Animal bite.
Yeah.
It is covered under personal accident policy if it is accidental, but if it is intentional self-injury or intentional exposure to the animal,
Yeah.
then depending on that situation, the claim would be decided.
And whether if death due to mosquito bite is covered?
Pardon?
Death due to mosquito bite.
Mosquito bite, there has been difference of opinion, but there has been one court verdict also where it was made payable. But
Okay.
mosquito bite actually would not lead you to the direct accidental death. It would
Okay.
lead you to the sickness and then it would lead you to the death. So there is no actually direct relationship between the mosquito bite and death as such.
Okay.
So
Thank you.
there can be difference of opinion, preferable if I believe not from exam point of view, but from claim settlement point of view, I would say it is better to have a medical legal opinion in place if there is difference of opinion between the hierarchy in the office.
Okay. Yeah. Thank you.
So coming to Saral Suraksha Bima. Premium, this is a very peculiar feature to Saral Suraksha Bima. Premium is allowed to be paid in installments. This is the very peculiar feature. In no other policy in miscellaneous line of business, installment premium is allowed. This is allowed only under Saral Suraksha Bima policy. Premium payment is allowed to be paid in monthly or quarterly installment. Insured has the choice to choose how he will want to pay, monthly EMI or quarterly EMI. Grace period of 15 days will be given. Yes.
Snake bite is covered. Snake
Pardon?
bite. Snake bite.
Sir, again and again we are, I think, going to the same thing. Snake bite has to be accidental. It has to lead direct to the death. Then only it would become payable. It depends on case-to-case basis. Like the person who is somewhat volunteers himself after seeing the snake. See, there has been an incident that a snake was seen in a train, local train. A layman who is traveling, if he volunteers himself to take him off the train, take that creature out of the train, and he gets a bite and dies, it is intentional volunteering to the hazardous activity. But if had he not known and suddenly the snake is there in the local train, bites and the person dies, it will be accidental bodily injury. Everywhere we have to apply that logic. That is why that definition of accident is so very clear and so very important. It has to be sudden and unexpected. It has to be external means, violent means. External, violent, visible means. So if all those four elements are satisfied, it would be considered accidental death and claim would be paid. Then grace period of, coming back to Saral Suraksha, grace period of 15 days is allowed for installment. So much of leniency being given by IRDA to the people to buy PA policy.
Ma'am, sorry to interrupt
15
you.
days.
Yeah, sorry to interrupt you, ma'am, once again. So here,
Yeah.
the grace periods are revised to 30 days in all the policies wherever installments are there. So is the same logic applicable here, or since it is an IRDA product, so we have to go as it is, like if they are writing 15 days, so it
Maybe
will
I
be
will
15 days only.
revisit and confirm to you.
Yes, ma'am. In
Understand?
Master Circular 2024, no? These grace period has been revised to 30 days in all the products, ma'am.
Then if there is a circular, maybe I have
It
skipped
will be
it.
applicable, ma'am, then?
Whatever is there, it would be applicable. The circular
Oh,
must have been taken out based on IRDA revision only, but still we
oh,
can confirm from head office.
okay, okay, ma'am.
Maybe you WhatsApp me, I will reply.
Okay,
Confirm from head office and reply, or if you have a contact, you can confirm directly from head office also.
yes, ma'am. Yes, ma'am.
No issue. During such grace period, coverage will not be available from the due date of installment till the premium is actually paid. Grace period is allowed, but cover will be discontinued for the gap period. No interest will be charged if the installment premium is not paid on due date. In case of installment premium due not received within the grace period, policy will get cancelled. even that grace period of 15 days or 30 days, whatever she says now, is elapsed, then the policy will get cancelled automatically. In the event of a claim, all subsequent premium installments shall immediately become due and they have to be paid. Even if after one installment the death of the person occurs, remaining installments would be recovered and then the claim will be paid. The company has a right to recover and deduct the pending installments from the claim amount payable. Coming to student safety insurance policy, this again covers human life. PA benefit to registered students, per student 10,000. Some insured is allowed, and death, PTD and PPD is the cover available. Medical expenses for treatment in hospital or nursing home as inpatient and for the injuries sustained in accident are allowed. Medical expenses per student 500 per year. These amounts are very low, but the premiums are also very low. Policy has any 1 year and any one accident limit. Any 1 year and any one accident limit. Two options are there, 5 lakh and 10 lakh. And accordingly, you may have seen in the reckoner also that premium charts are there. Differential premiums are to be paid. The educational institute has to exercise the choice right at the beginning. Features of the policy. Policy is issued in the name of educational institute. Claim is paid to the parent or guardian registered in the educational institute. All students are to be covered. There cannot be selection. All students educating in that particular organization have to be covered under the policy. Additions during the year are allowable, but deletion is not allowed. There has been one question on this, whether deletion is allowed or not. Coming to burglary insurance policy, it covers contents of any commercial organization, and what is covered is loss or damage by burglary is covered. It covers cover is available to commercial establishment, factories, godowns, etc. Theft is not inbuilt cover. It has to be specially taken as add-on or extension under the policy. Then here there are relevant IPCs. Theft IPC is 378, robbery IPC is 390, dacoity IPC 391, housebreaking IPC 445. The beautiful feature is burglary is not defined in IPC. I am not very sure whether any question will come on IPC number. I think there has been a question on IPC number, but now this IPC has been changed to a BNS, Bharatiya Nyaya Samhita. So there the numbers have changed a little bit. Either you can Google it and remember and then decide whether those would become payable. Those would be a part of the exam or not. But Bharatiya Nyaya Samhita is in place and the numbers have changed. But there also burglary is not defined.
Excuse me, ma'am.
Yeah.
In Saral Suraksha Bima, that hospitalization expenses is an add-on, optional it is, or inbuilt.
Which one?
Saral Suraksha Bima.
Huh?
In that hospitalization expenses, is it an inbuilt cover or optional?
I'll show you the slide. It is optional.
Optional.
Base cover is death, PTD. Death, PTD and PPD is the base cover, and optional covers is weekly benefit, medical expenses and educational grant.
Okay, ma'am. Thank you.
So coming to definitions under burglary, housebreaking is defined is said to commit housebreaking if the house he trespasses the house while entering into for committing the theft, or he even leaves the house after committing the offense in one of the 6 ways defined in Indian Penal Code. That is called housebreaking. Theft is taking away dishonestly any movable property of a person without his consent or knowledge. Robbery is theft plus bodily injury or death or wrongful restraint, instant death, hurt or wrongful restraint. Robbery is an aggravated form of theft because it is accompanied by bodily injury also. And dacoity is 5 or more persons jointly attempting or committing robbery. So it goes that way. Theft is simpler, robbery is a little more, and dacoity is 5 or more persons engaging in the act of theft, that is taking away the contents or belongings in possession of someone or in the some premises, plus attempt to a threat to the body also. Burglary definition: burglary means theft of property from premises by making felonious entry into or exit from the place using violent and forcible means. Forcible entry is the main trigger for burglary policy. Violent and forcible means against property or even individuals. Burglary includes hold up also. In addition to the contents lost, loss or damage to any part of the building or window or door, that is also paid if there is an attempt of burglary or there is actually burglary. The cost of repairs to the premises is reimbursed. What are the exclusions under burglary policy? Losses caused by member of the insured's household. Then act committed by persons lawfully present on the premises. Items covered under plate glass or motor policy. Of course, if there is some dedicated product for particular thing, then those are not covered under this policy. Loss due to fire, riot, strike, terrorism is not covered under the policy. Then losses discovered at the time of stock taking, checking, or mysterious disappearance, those are exclusions. Some of the above can be carved back, but as per clause, standard product, this is all excluded. Extensions under burglary policy: riot and strike, theft and larceny not accompanied by violent entry or exit. Expenses for restoring paper files, plans, drawings, records, data installation cost for computer programs. These all have to be taken right at the beginning of the policy. Expenses for clearance of debris, movement, or protection up to 10% of sum insured, and loss or damage to property of employees up to a specified limit if they have been specifically mentioned in the policy along with the specific sum insured. Then they would stand covered under burglary. Coming to baggage policy, it covers accompanied baggage containing personal effects whilst in transit. Dealer stock or traveler samples are not covered. There has been question on this. Cover is for a specified journey or trip. It is not an annual program. What we travel daily, commute to our office, those type of travels are not covered. During that travel, baggage policy is not to be issued. Losses occurring during routine travel are excluded. Consumables or perishable articles are excluded, and property in use during travel like umbrella, sticks, etc., those are also excluded under baggage policy. All risk policy, what is specifically excluded is only not covered. Policy contains single article limit and parent set clause. There is a clause called as parent set, which means that in the pair, if one of the earring is lost, then proportionate claim would be paid, and the insured cannot claim that because now the entire pair has gone, it has become useless. Full sum insured has to be paid for that total article. The primary and indispensable requirement is good moral hazard of the insured. All risk policy is not to be sold to each and every layman or insured. The insured whom we know, who has placed some other business with us, only to them it is to be sold. Policy. So good moral hazard is the primary requirement. In exam, there is no question of other business and all, but this word is very important, that good moral hazard is primary requirement for all risk policy. Policy is given on accommodation basis to valued clients whose business is on our books for years. No selection of risk, property, or items is allowed. If someone wants to take a risk policy for his jewelry, whatever he possesses in his house or whatever he is having, owning, all those have to be covered under the policy. He cannot say, I want to cover only 4 items, 5 items out of 10. That type of selection is not allowed under all risk policy. Coming to money insurance policy, it covers cash in transit and cash in safe. Cash in safe is nothing but burglary cover because it is situated in the premises, but it can be extended to robbery, theft, or accident also. Cash in safe cover is generally restricted to 48 or 72 hours of the arrival of the money in the premises. It cannot be that permanently the organization will keep the cash in the safe and it is covered. The cash, this is actually money insurance covers business cash. So what is collected during the day, if next day it is going to be deposited to the bank, then that money is covered under cash in safe cover. What are the exclusions? Shortage due to error or omission is not covered under the policy. Money carried under contract of affreightment is not covered, and theft of money is not covered under the policy. What are the features of money insurance policy? Policy is subject to premium adjustment clause. What we charge at the beginning is premium on the estimated turnover. Person would not know how much money is going to come and how much he is going to send out. So we charge premium on annual estimated turnover, and it is to be adjusted at the end of the policy period. Average clause is not applicable. Insurer's liability is limited to per loss or per transit limit. No underinsurance is applied even in case of partial losses. Infidelity of employees, if discovered within a specified number of hours, is covered. Infidelity extension covers loss discovered after specified number of hours. So there is a little tricky this thing. Up to certain number of hours is inbuilt cover. Beyond that, if you want a cover, it has to be taken as extension. Extension for disbursement risk covers losses when the actually money is being disbursing. This is mainly applicable to contractors who disburse daily wages to the workers. Money in till or counter during business hours at additional premium, this can be granted against hold-up-ons. Coming to bankers' indemnity policy. 1 minute. Bankers' indemnity policy provides cover against white collar crimes because who cause loss to the bank? Mainly the employee's fraud. So it is white collar crime that is covered under bankers' indemnity policy. It covers direct loss of money or securities sustained by the bank. There are following sections. Sections are A to H. A is on premises cash is covered. B is in transit cash is covered. C is forgery or alteration done by the employees causing loss to the bank. D is dishonesty of employees, that is infidelity causing loss to the bank. E is hypothecated goods if there is some loss of that due to infidelity of employees. F is registered postal sendings if money is being sent by post parcel and it gets lost. G is appraisers cover. Banks always engage into gold money lending against gold, so that gold is valued by appraisers. If there is if there is fraud or there is some wrong practice done by the appraiser, that stands covered if it causes loss to the bank. And Janata agents, who are the pygmy agents who collect money from various places and bring it to the bank for depositing. So A to H are the sections under bankers' indemnity policy. There is something called as basic sum insured, and A to H sections are additional perils which are covered under the policy. Fire, right and strike, burglary, housebreaking, theft, robbery, and hold-up. These are the named perils for which cover is there for money or cash that is kept in the bank. A to H are the sections, and these
What is
are the
hold up?
perils.
Excuse me, ma'am. What is hold up?
Hold up is like making a person be in a fix and taking away from him the cash.
Okay, okay.
Like
The force
At
is applied
gunpoint,
against a
at
human being.
gunpoint or something.
No, maybe gunpoint.
gunpoint.
Maybe just threat also if he is put by his hands are tied behind
Yeah, ma'am.
anything.
Making captive and then taking off the money.
Sort of, yes.
Okay, thank you.
What are the general points regarding bankers' indemnity? Rate of premium is applied to basic sum insured. It is higher than what is there for additional sum insured. Rates wouldn't be a part of question, but the differentiation is there that additional sum insured is charged lesser premium, and basic sum insured, because it covers all A to H sections, the rate would be higher, should be higher. To provide for normal increase in staff, 5% is added to the declared number. No branch discount for more than 500 branches. See, there is a system of allowing discount in bankers indemnity policy. I am talking about the standard calculation method. In that, there is a, if you have seen the clauses or Reckner or our book of miscellaneous, there is a para slab wise saying how many branches, what discount is to be allowed. So if you can make an observation or a perusal of it, as the number of branches go up, the discount goes lesser. For up to 50 branches, highest discount is allowed because the control and supervision would be very strict. As the number of branches increase, the supervision and control mostly would become less effective, and therefore discount goes on becoming lesser. Then the very peculiar feature of bankers indemnity policy is that it is on discovery basis and not on occurrence basis. All miscellaneous policies, those policies which deal with property, are on occurrence basis. The event that causes loss has to occur during policy period. But bankers indemnity policy is on discovery basis. The loss has to be, if loss is discovered during the policy period, then the policy triggers. Discovery period is 6 months from the date of loss. And there is something called as a retroactive period. It is 2 years from the date of discovery. That if the loss is discovered that one Mr. A has been doing fraud in the bank, then how the claim is calculated up to backward 2 years, all the fraudulent activities he has carried on causing loss to the bank would be summed up and considered for a claim. If he has been doing it for past 4 to 5 years, then we will stop at 2 years. So that is the retroactive period under the bankers indemnity policy. And the claim assessment has to be given to the chartered accountant. Yeah.
Ma'am, is discovery period and retroactive period different, ma'am? Like, how is it
Yes.
different, ma'am?
See, discovery period is if the policy is running from 1st April to 31st March.
Okay.
The fraud has occurred in April itself. So it has to be discovered within 6 months. Then only it would become payable. If it is discovered beyond that, it would not become payable.
Okay, ma'am,
But
if I find it out within 6 months from the 31st of March, like from the expiry of the policy, if I find it within 6 months, that doesn't trigger this.
that is also payable. That is also payable. There is some phraseology. I'll come to it in the next slide.
Okay, ma'am.
Retroactive period relates to calculation how much for the backward period you will go if the same fraud has been happening. And discovery period is finding out the loss itself.
Okay.
Who will pay if the losses are discovered during the discovery period? The existing insurer or the future insurer will pay? Who will pay for it?
Existing insurer. Future insurer would not pay.
For him, it
Mostly
will be
the policies,
retrospective period. Then why he won't pay, ma'am?
unless the policy is not renewed, existing insurer would pay. Otherwise, it will go to the next person.
Next insurer. Okay. Thank you, ma'am.
What is the excess under the bankers indemnity policy? For claims under section A to E, it is 25% of each loss or 2% of basic sum insured, whichever is higher, subject to maximum of 50,000. Here the word is maximum. Usually we give the excess, it is minimum. So here it is maximum 50,000. There is no excess for claims for fire, riot and strike, burglary and housebreaking. And for claims from F to H, 25% of each and every claim is the standard excess. What are the exclusions under bankers indemnity policy? Losses due to wrongful act or a default of any director or partner other than salaried one is not covered under bankers indemnity policy. Personal property confined to the care of the insured bank is not covered under the policy unless specifically taken as a cover. Losses caused by earthquake, typhoon, cyclone, flood, or other convulsions of a nature is not inbuilt cover under banker's indemnity. Always remember, banker's indemnity covers only cash and securities. The building of the bank, furniture of the bank, for all that property policy has to be separately taken. Losses caused by negligent act or omission of insured's employee. However, negligence during transit is automatically covered. Losses due to any act or omission committed by after discovery of a loss in which the employee was, I think I'm not able to read the slide properly. Then these are the excluded things: error and omission committed by the concerned employee after discovery of the loss. If there is a loss which has come to light by fraud done by one employee, actually he has to be suspended. At times he is transferred to some other branch or some other office. There also he continues to do the same thing, and then those also add to the loss. Then those subsequent losses are not covered under the policy. One person, if loss is discovered, then there the claim has to end. Bank has to take some proper action. Either he should be suspended, or he should not be given any sensitive portfolio. That is the whole idea behind excluding, because the bank has to act as if uninsured, and they have to take proper steps to safeguard their money and securities. Coming to jewelers block policy.
Excuse me, ma'am.
This,
Excuse me.
yeah.
Ma'am, you told basic sum insured and additional sum insured. In basic sum insured, the rate is high because it is covering all A to H perils. So, in additional sum insured, what will be covered?
In additional sum insured, generally under A and B premises and transit, additional sum insured is given. So if a claim comes, like, see, for basic sum insured is 5 crore and additional sum insured for premises is taken 100 crore. If a claim comes, the sum insured, the claim would become payable for premises risk is 5 basic plus 100. So 105 would be the claim payable as far as when money is lost when it is in the premises, due to fire, burglary, and all those covered perils.
Okay, ma'am.
Am I clear?
No, I'm just asking, in additional sum insured, the peril outside the premises is covered. I mean, whatever happens outside the premises will be covered under. Is it like that?
Providing additional sum insured is for actually addressing the real protection needed by the bank. See, basic sum insured cannot be 100 crore, 200 crore like that, but the cash at any point of time bank would be having in at one place can be 100 crore, 200 crore. Basic sum
Okay.
insured covers
Okay.
all the sections, so that is generally taken for a smaller amount. And additional sum insured for premises is taken because actual cash at in one particular place in a bank mostly would be higher.
Okay, ma'am.
So
Okay, got it.
the structure of the policy is that when it is, see, if you are giving basic sum insured as 100 crore, that means you are allowing for fraud also, appraisal also, pygmy agents also, everybody you are allowing 100 crore sum insured, which is not logical and which would cost a bank a lot, because the rate for basic sum insured is actually very high. Now those differentiations have gone diluted, all those things you forget when exam is there. But
Okay, ma'am.
actually it is very high, and there is no need for such huge sum insured just for the sake of covering bank whilst in the premises. In premises, actually what cover is required is fire and burglary only. So for that premises section, they take 100 crore and 5 crore they take as basic sum insured for all the parents, for all the sections.
Okay, ma'am. Got it.
Coming to jewelers block policy, this is designed to address the requirement of jewelers shops. Policy was specifically designed actually to cover diamondaries. Diamondaries are establishment dealing in diamonds. Specific mention of brokers, cutter, sangadia, dispatch by registered post parcel. These are the terms which relate to diamondaries or jewelers block policy. Policy can be used for jewelers, wholesalers, or retailers also. Rather, predominantly now it is used for wholesalers and retailers. Policy not meant for those whose work is predominantly manufacturing, like cutters, goldsmith, diamond manufacturers. For them, package policy is given. Jewelers block policy is meant for jewelers shops actually. Policy cannot be issued to angadiyas, brokers or pawnbrokers. Coverage under section 1 is compulsory because when the golden jewelry is in the premises of the shop, that cover is compulsory, and then other sections can be allowed under jewelers block. What is the cover?
Ma'am,
Yeah.
the specific terminologies used for diamantaries include cutters. And again, in the same section, if you can go back to, yeah. And again, policy not meant for, then again it is mentioned cutters. So it is
Meant
contradicting.
for means the insured itself should not be broker or cutter. Insured has to be diamondary or jeweler. This is
But
the
then,
terminology because there is some part of the cover which
okay,
covers cutters. But if
okay, okay.
somebody is only in the engaging in the occupation as a cutter, he
Hmm,
cannot be given jeweler's block policy.
correct, correct. Okay, ma'am.
Coverage under section 1 is on premises. When the stock is on premises, the perils covered are fire, explosion, lightning, burglary, housebreaking, theft, robbery, riot, strike, malicious damage, and terrorism. Here, fire and AOG perils, that cover is not there. That AOG peril is not inbuilt cover under JB. Section 2, in the custody of insured, his partners, employees, directors, sorters, brokers, agents, cutters, and goldsmith. When the stock is in the custody of any of these people, it is covered, but for the business purpose, of course. Section 3 is transit by registered post parcel, air freight or angadiya. Postal sending limit is there, 5 lakh or 10% of section 1 sum insured. And section 4 covers furniture, fixture, equipment associated with the jeweler's business. What are the categories of risk? There are 3 categories of risk under jewelers block policy. Class 1 is where watchman is employed on 24-hour basis for the premises covered, dedicatedly for that particular jeweler who is our insured. Class 2 is common watchman to the entire building. Shop is there on the ground floor. The jeweler does not have his own watchman as such, but the entire building has the watchman. Class 3 is all other risk, means there is no warranty is imposed and there is neither his own watchman, there is no watchman to the building also. And then it is class 3. Class 3 risks are to be rated actually very, very high. What are the additional covers with jewelers block policy? This is the vocabulary associated with JB. There has been one question on this. Shoplifting, it is taking away while the goods are being shown to the customer. Mysterious disappearance, sleight of hand, hath ki safai. Standalone terrorism, it is given when it is in the transit. Tiger kidnapping, hallmarking, and sister concern extension. These are the vocabularies associated with jewelers block policy. I think that much is enough from examination perspective.
Ma'am, what is tiger kidnapping?
Tiger kidnapping is actually holding someone for at gunpoint and saying that you send your stock here or you give me this much gold and then only he will be released.
Okay.
Hostage.
Yeah.
Somebody is taken hostage and then gold is demanded.
Okay, ma'am.
And what is sister concern extension, ma'am?
Sister concern extension is what happens in case of jewelers. There may be if they are really into doing very well in their businesses, what happens is they create some other sister concern to share to save the tax or have other facilities of the business community or business line of business as such from the government. Then that stock is also kept in the same premises. Only in the books of accounts actually that sister concern exists, but actually the business is together. They
Okay.
bring the stock together, they keep it together, they sell it together. It is happening in the same premises. Then, if in the event of loss, we say that show your books, how we will decide the claim by books of accounts only. Then, sister concern will be having that stock which is stolen. Unless that sister concern extension is taken under the policy, we will not be able to consider that amount also for the claim. What we will pay is what is appearing in the books of the original insured only. So that extension is allowed, and a jeweler who is having sister concern in the same premises has to take it.
Okay, ma'am. Thank you.
fidelity guarantee policy. It covers an employer
Yes,
in
ma'am.
respect. Yeah.
Ma'am, flood risk.
Which
Flood,
risk?
flood. Mean STFI.
Type of huh?
STFI. STFI perils in jewelers block.
They are to be taken additionally by charging premium as per fire guidelines. That is not inbuilt cover.
Okay.
AOG perils STFI is not inbuilt cover. You read this first slide where I have given the perils. No, I have mentioned fire, explosion, lightning. There is no flood and storm and all those things.
Okay, ma'am.
Coming to fidelity guarantee policy, it covers an employer in the respect of direct financial loss he may result due to employees' dishonesty. Fidelity guarantee business is divided into three sections: commercial fidelity guarantees, code bonds, government bonds. There is hardly any question on FG policy as such, actually. Just give it a one reading and one listening to. Sorry. Commercial fidelity guarantee is the policy that covers direct pecuniary loss due to fraud or dishonesty committed by the employee in the course of his regular duties. That is what we give fidelity policy. Discovery period is 12 months from the resignation, dismissal, or retirement of the employee, or not later than 12 months after termination of the policy, whichever is earlier. So there is discovery period, and the loss has to be discovered within 12 months of the resignation, dismissal, retirement of the policy. Beyond that, the policy may not consider paying the claim. This is the standard FG policy. Coming to code bonds, there are two types: administration bonds and liquidator or receivership bonds. Then when code appoints a state administrator or liquidator, then these bonds are issued. Government bonds are custom bonds. They are executed by importers and they can be long term. And there is something called as excise bonds. These are executed by exporters, but these are strictly annual contracts. What are the features of bonds? These are specialty contracts. They are executed under a seal, then attract higher stamp duty. Stamp duty is collected from the insured. Otherwise, in other policies, we do not collect stamp duty from insured. These bonds are automatically renewable. Coming to householders policy. It is designed to meet all the requirements of household. Only one policy can be issued to one household. There cannot, multiple policies cannot be taken. It covers 10 sections. Total 3 sections are minimum. Section 1 is compulsory. Section wise premium rates are given. Discount is allowable depending on the number of sections. If 4 to 6 sections are taken, 15% discount. More than 6 sections, 20% discount is allowable. Section 1B, contents can be given on first class basis, maximum up to 50 lakh as per IRDA circular of June 2003, and condition of average is applicable. From this only, actually, Griha Suvada policy has come out. What are the householder sections? Fire and allied perils for building and contents. A is building, B is contents. Burglary and housebreaking for the same contents. All risk policy covering personal jewelry and valuables. 4 is plate glass. 5 is breakdown of domestic appliances. 6 is TV VCR. It also includes legal liability up to 25,000. Then pedal cycle, baggage, personal accident for a family. Then section 10 is public liability for indemnity limit up to 25,000 and workman compensation, that is the employees working in your household. And section 11 is personal computer. General notes and discounts. Section 1B is compulsory. Fire contents. Discounts are 15% discount on all non-tariff sections up to 5 and 6 section. Beyond that, 20% discount. Under insurance, up to 15% is waived for section 1 only. No excess applicable to fire section, because in fire dwelling, it does not carry any excess. Nil excess for TV section. These are the peculiar features. Coming to shopkeeper, on the same line, whatever needs of shopkeeper are covered under shopkeeper insurance policy. Only one policy can be given to one shop. Again, 10 sections are there. Section-wise premium rates are given. Here also 4 to 6 sections, 15% discount, more than 6 sections, 20% discount. These are the sections. I will not read through. This is common, and I think just one reading will help you. Remember, whatever is associated with the shop is covered under shopkeeper's policy. There is one special cover, loss of profit. That is also allowed under shopkeeper policy. Coming to office protection shield, this is office protection shield is actually meant for small offices, individuals who are running the offices who have that kind of setup. Then building contains tenant liability, money insurance, fixed glass and sanitary fittings, fidelity guarantee for employees, damage to electronic equipment, cost of reinstatement of data, and portable computers. These are the covers available under office protection shield. Further sections are additional expenses for rent in the event of alternative accommodation required, post operation of the peril, then PA for self and employees, breakdown of office appliances, baggage, public liability. Here the peculiar feature is the discount is depending on is renewal discount which is allowed, not section discount. First, second, third, and fourth renewal discount is 5, 10, 15, and 20%. Maximum 20% discount is allowable for OPS. So, what are the other package policies on these lines? Doctor protection shield, doctor, chartered accountants, financial consultants, architects, engineers, they can have package policies. Adhikari Suraksha Kavach is for one individual covering all his insurance needs in one package policy. Package policy for credit society is on the lines of bankers indemnity policy because they engage into similar kind of business. And multi-peril policy for LPG gas dealers, same again, the protection needed by the gas distributor is covered under one package policy. So this is the section-wise tally. There has been one question long back on how many sections are there in LPG gas dealer policy. That is why I have made this slide. Ascending order, you can remember Credit Society 6 sections, Adhikari Suraksha Kavach 7, Doctors Package 7, Householder 10, LPG Dealer 10, Shopkeeper Office Protection 11, and Doctor Protection Shield 13 sections. The best source of information is clauses and circulars on portal, and of course, III books. Coming to liability line of business. What is a liability? Liability means responsibility, even in layman's language. What we say, what I am liable for, what is my responsibility for which I am going to be held responsible, that is my liability. It refers to both the things, what I am expected to do and what I am not, what I am expected to avoid, what I am obligated to do to others and what not to do, that is also my responsibility only. Responsibility can be moral, financial, and so many types, role demanding, so many things, societal, and so many types of responsibilities can be put on your shoulder. But when it comes to liability insurance, what we cover is only legal liability. What law says you are supposed to do, and if you breach that and cause harm to third party, only then that is covered under liability policy. So liability insurance covers legal liability only. What is the liability terminology? Common terminology is indemnity limit, any one accident limit, and any 1 year limit. This is mentioned in each and every insurance policy. That is something is called as a defense cost. Defense cost is nothing but legal expenses incurred by the insured to defend the legal case. When a claim under liability policy arises, when a legal notification is received by our insured from a third party, then only the liability policy would trigger. And in that case, in order to reply to the allegation made on him, he will have to engage a lawyer, and those expenses to defend himself and prove either that he is not liable to pay, and if it fails, whatever award comes, that would be paid as claim. So in that case, that defense cost is paid as a claim under the policy. And retroactive date is the very first date of the very first policy commencement. This happens only in the case of claims made policy. What is policy period? Policy period is the 12 months period for which the policy is issued. All our products are 1 year policies only, other than 1 or 2 exceptions. So that 12 months period is policy period. And what is period of insurance? Period of insurance is the period that starts from the very first date of the very first policy. That is retroactive date till the expiry of the current ongoing policy. So that longer period is called period of insurance and 12 months period is called policy period. Then there is something called as prior and pending acts. When we start the very first policy, what has happened prior to that, or what was pending at that particular date, all those cases or all those acts giving rise to a claim are excluded under the policy. So prior and pending exclusion is common to all liability policies. What are the terms? Territory and jurisdiction. Territory is geographical area of operation where actual manufacturing takes place, where actually business activities are carried on by the insurer. That is called territory. The event that gives rise to third party claim has to happen within the territory. And jurisdiction is the place from which action can be brought. Court case can be filed from within any court of the jurisdiction. So in case of a auto component manufacturer, if the territory is India, his premises, his manufacturing has to be within India only. If he has taken territory India but is having some manufacturing facility outside India and a claim comes from the items manufactured outside India, that wouldn't be covered under the policy. Jurisdiction there can be manufacturing in India, but if those things are those items are being exported or sold to someone outside India, then jurisdiction has to be allowed worldwide. Because the person who is consuming that item there is not going to come to India for filing a suit against our insured. He will file the suit for the third party property damage or bodily injury where the item is being used. So that jurisdiction worldwide is to be given where the items manufactured by the insured are being also sold outside India or outside the territory. What are the basis or versions of liability? Occurrence base, there is no retroactive date. Occurrence based policy means the 12 months period for which the policy has been given, whatever acts are done, whatever manufacturing is done, whatever business activities are carried out in those 12 years, anytime later, if third party liability arises, notification is received, that year's insurer will have to pay the claim, irrespective of whether the subsequently policy is taken or not. Claims made basis, it is with retroactive date. There, that period of insurance is the actual period of coverage. So very first policy is given from 1st January 2020. It is being renewed year after year and it is renewed in 2025 also. In 2025, if something is discovered which was manufactured in 2023, then also this policy would pay the claim because the retroactive date is prior to 2023. So in occurrence basis, there is no retroactive date. In claims made basis, there has to be retroactive date, and whatever is covered after, whatever has happened after retroactive date is only covered under the policy.
Ma'am, can you repeat occurrence basis?
Occurrence basis is the policy which is given for 12 months, and whatever act, whatever manufacturing is done within that 12 months, any liability arising even after the expiry of policy anytime later will have to be paid by that insurer. To give an example, if policy in 2024-25, or rather let us go by calendar year, from January to December 2024, the policy was with Oriental. And now in 25 January, it has come to New India. If some third party liability notification is sent to us and we find that the root cause of that liability is something which was manufactured in earlier year, then that notification would be passed on to Oriental because that was manufactured during the period for which Oriental had given the policy. And the policy is on occurrence basis. But in the same claim, if the policy has been claims made, we would have protected that retroactive date of 2024. So our policy would be having period of insurance 1/1/24 to 31/12/25. And our policy will pay that claim because it is falling within the period of insurance.
Okay. Got it.
Madam, please policy period and period of insurance, please. One more time. Policy period and period of insurance, madam. One more time, please.
Policy period is 12 months period for which the policy is issued. 1st January to 31st December. And period of insurance is from retroactive date till the expiry of the current ongoing policy.
Okay.
Should I repeat with the example?
Ma'am, please explain. Excuse me, ma'am.
See, if the policy is given by New India from 1st January to 31st December 2025, that is policy period. It can be for claims made or occurrence based. Policy period is 12 months only. But for claims made, the concept of retroactive date comes in. So if the earlier policy is from 1st January 2024, then period of insurance will be from 1st January 2024 to 31st December 2025. Policy period remains 12 months only, January 25 to December 25, but period of insurance becomes January 24 to December 25.
Insured can decide anything, no? Occurrence basis or claim made basis, this will be decided by insured, no?
It is decided by insured, but preferably claims made policies are more common in the market because for the insured also, it becomes very tricky to maintain the record in which year, from which insurer he had taken the policies, what were the limits and all those things. If the claim comes 2-3 years afterwards, he will have to keep the record and the insurer should be in a position to accept that yes, that year I had issued the policy, then only the claim would be honored, no? So
Okay.
claims made is more common and more convenient both to the insured as also to the insurer.
Okay.
Because everything is written in one single policy schedule only.
Right.
Coming to types of liability policies, these are the common types: public liability policy, product liability policy, WC, that is employees compensation policy, professional indemnity or error and omission, clinical trial policy, director and officers liability policy, and commercial general liability policy. These are the very common forms of liability policies which are used in the market. What is product liability policy? It covers third-party liability in respect of bodily injury or property damage arising out of defective product manufactured and supplied by the insured. This defect is not something which is completely wrong. It is something which is beyond the control of the insured but has crept in. And if that poses a threat of bodily injury or property damage, that third party is going to give a legal notification to the insured that claim is paid under product liability. Product liability common extensions are product recall, product guarantee, and financial loss. These are the very commonly demanded and allowed extensions. What is product recall? Calling back of a product or a part thereof because their use or consumption is likely to cause the insured a legal liability arising out of bodily injury or property damage of third-party consumer. You must have seen so many recalls in the market for automobile line. Some part goes wrong, seatbelt goes wrong, this goes wrong, that goes wrong. Some defect is found, the root cause is somewhere, which may pose a threat that there can be accident to the vehicle or there can be bodily injury to the passengers. And so the particular batch is called back by the manufacturer himself in order to avoid further claims. If one such incident is found out, in order to multiply the loss, what is preferred is they call back the batches and then they either repair, replace, rework, and again send back the vehicles or whatever is the product. So that calling back of a product by the manufacturer himself or insured himself is product recall. What are the recall expenses? Recall is not liability, though it is given as an extension of product liability. It is the list of expenses which are paid under product recall extension. Expenses incurred to inspect, withdraw, or destroy the product. Then communication in TV, radio, or in any other means nowadays. Then shipping from purchaser or customer. If you are calling back the product, you have to bring it back at your own expense. Then that is covered under recall. Then overtime and additional personnel costs Normal manufacturing schedule cannot be disrupted. Either the same people will have to be made to do overtime for this sorting, withdrawing, destroying the product, or some additional personnel will have to be engaged. So those extra expenses are covered under recall. Storage cost, cost of disposal, cost of redistribution. Whatever faulty atoms, defective atoms you have called back, you cannot store in the same premises where your freshly manufactured goods are being covered, are being stored. So either you have to engage extra storage facility, those costs are covered, or you have to dispose it off, or you have to rework and redistribute. So all those expenses are covered under recall expenses. Independent recall consultants are engaged. This process is a little tedious and it has to be carried out very systematically. So there is a profession called a recall consultant. So such recall consultants are engaged if the such situation of recall arises. So their charges are covered under recall. Public relation costs are also there. Those consultants are celebrities are engaged in order to protect the reputation of the company or the insured. If those expenses are also covered under recall. All that what is incidental or directly related to the recall process are covered under recall expenses. Crisis communication cost. There is a crisis in the manufacturing because suddenly you find out something is going defective. So those expenses are covered. Independent security you may have to hire for extra storage or whatever. Then that is also covered under recall. Cost of examination, reworking or replacement of the product. There are certain items which need not be completely disposed of, which can be reworked and again sent back and reused. So that expense of rework is covered under recall expenses. Coming to product guarantee. What is product guarantee? It covers expenses arising out of or pertaining to product guarantee for removal, repair, alteration, treatment or replacement of a product. Expenses type is similar to recall, but guarantee creeps in when the product fails to perform the intended function due to faulty design, manufacture or faulty installation after the handover to the customer. In recall, there is a defect in the product and there is potential third-party liability, so the product is called back. In product guarantee, the product itself fails to perform the function, like an auto component manufactured for some brake assembly. It is sent to the next person in the manufacturing line, but it just doesn't fit in because the specifications have gone wrong. Then it has failed to perform the function for which it was made to fit into that assembly. So the product guarantee would trigger. What is financial loss? Cost and expenses arising as a result of financial loss incurred by customers or third parties as a result of product defect to perform the function for which it is designed, manufactured, supplied by or on behalf of manufacturer. Taking forward the same example what I gave you for product guarantee, if an auto component is manufactured, it is sent to the next person, it does not fit into assembly. He fits in some assemblies, but subsequently it is found those assemblies are not working properly. What he has to do, he has to again disassemble those things. And for that, he will have to engage extra personnel. He will have to engage, spend extra time. So all those expenses, he would say, why I have to incur? It has occurred because your product is problematic. So those expenses are the extra financial loss, extra expenses which your customer or third party has incurred. So those are slapped back to the our insured or the original manufacturer. So that loss is covered under financial loss extension. Coming to public liability, it deals with third-party legal liability which arises out of ownership, possession, or use of premises. What is relating to premises is public liability, and what is related to product manufactured is product liability. Depending on the activity undertaken, industrial or non-industrial public liability policy is issued. For manufacturing concerns, industrial liability policy is issued, and for theaters, hotels, and some other such premises, non-industrial public liability policy is issued. For hazardous activities, there is Public Liability Act policy, which is compulsory. What are the extensions under public liability policy? AOG peril, transportation extension, pollution extension, technical collaborator extension, food and beverage, lift liability. These all are the things which are associated with the premises, predominantly premises of the insured. So those are the extensions under public liability. Secondary auto liability, personal and advertising injury, medical expenses, traveling of executives. These are the extensions given under public liability policy.
Ma'am, here food and beverage extension will include the canteen facility of the employer also.
Insured,
Canteen
yes.
facility for the employees,
If,
that will also
if
be
that
included.
food is provided not to the employees but to the third parties, the customers who visit the insured premises and they suffer some bodily injury out of the food or beverage consumed, then that claim will be entertained under public liability food and beverage extension.
Okay, ma'am.
Coming to Public Liability Act policy, it is Act only cover. It is issued as per the provisions of Public Liability Act 1991. It is a no-fault liability cover. There doesn't have to be a legal notification, court case and award coming from the court. Here the claims settling authority is district collector, and whatever amount he says, the insured will have to pay that. Workmen of the employer are excluded from the compensation under Act policy because they are supposed to be covered under workmen compensation policy. Limits of the policy are to be in the ratio of AOA and AOY. Till 2024, it used to be 515, 1:3. Now, after amendment of 2024 December notification, it has become 1:2. AOA is equal to paid up capital minimum subject to maximum of 5 crore till amendment. Now it has become 250 crore. AOY, 3 times of AOA, that is maximum 15 crore till amendment. Now it has become 500 crore and 2 times. Premium depends on the limit of indemnity AOA and the turnover. ERF, there is something called as Environment Relief Fund. An amount equal to premium amount is to be collected and deposited with ERF, which contributes to compensation in case the total compensation exceeds the policy limit. See, like so far we have been giving policies for such small limits of 5 crore, 15 crore. Some big accident occurs and many people make a claim. There is possibility that entire policy limit of 15 crore would get exhausted. Then beyond that, we cannot leave the people helter and skelter that now my limit is over, you will not be paid the compensation. So there is something called as Environment Relief Fund and every policy would contribute to that. In that event, this fund will be triggered and compensation will be paid from that fund. This is a common fund for all insurers. What is the amendment to the Act?
Ma'am, would you repeat the could you go back to the previous slide? Would you go back to the previous slide, please? Yeah, the limits of policy, would you repeat those till AOY, please?
What you
Limits
want
of
me
the
to repeat?
policies. The limits of the policies, AOA and AOI, the
You see the
amendments.
slide. I think I have it here. This is a better one. Earlier
Okay.
it used to be
Thank you.
515. Now, after the amendment by notification dated 17th December 2024, these rules are called Public Liability Insurance Amendment Rule. Major changes are AOA has been changed from 515 to 250, 500 crore. I think this is what you wanted, no?
Yes, ma'am. Yes, ma'am.
Relief increased to, earlier it used to be 25,000 and all. Now the relief to the third party, aggrieved party is increased to, in case of death or fatal accident, 5 lakh per person. That is the maximum which an insured may have to pay. In addition to medical expenses reimbursement, maximum up to 1.5 lakh. Medical expenses up to 1.5 lakh may be awarded, and death compensation of 5 lakh relief may be awarded per person under this policy. This is the revision.
About the 1:3 ratio, it still exists?
Actually, as per Act, it doesn't exist, but there is no bar to issuing those policies also. Amendment does not say that you have to issue in this fashion, but they have amended it into 1:2. So obviously, everybody would follow that only.
Okay, ma'am.
We are supposed to follow 1:2 now. Practically, as I said, practically what you are doing as miscellaneous underwriter, you have to keep aside, because as far as my knowledge goes and information goes, we are continuing with earlier renewals, 515, which should ideally be changed to 1:2.
Okay.
Act policy, claim is to be made within 5 years of occurrence of the accident. Act policy is occurrence basis policy. There is no concept of retroactive date in Act only policy. The amount of claim payable is apportioned pro rata among all the policies covering statutory liability. If the same insured is having multiple policies, or if the same accident is covered under multiple policies and same victim claims under multiple policies, the claim will be pro rata divided among all the policy limits. Cancellation of the policy by insurer is to retain 25% of annual
Excuse
premium
me.
as minimum
Excuse,
premium.
excuse me, ma'am.
Yeah.
Excuse me. Ma'am, can you repeat this line again? You have said that Act only policies are occurrence based. Other liability policies are claim based policies?
Other policies are mostly issued on claims made basis, and there is a choice to the insured. This policy is by default occurrence based policy.
Ma'am, can you explain the difference again, please? Claim based and occurrence based.
Hmm?
Ma'am, can you explain the occurrence based and claim based?
Occurrence based policy is whatever accident or act giving rise to the claim occurs between 12 months period for which we have issued the policy. Claim can come anytime later. But
No limit.
we continue to be responsible to pay that claim. We cannot say my policy is over, I will not pay.
Okay.
Like my policy is from 1st January 2025 to 31st December 2025. In January 2025 or say April 2026, someone comes and says you had manufactured and supplied this and this item to me, and because of that now I am having bodily injury, so this is the notification, you pay me this much compensation. Occurrence basis policy, we will have to pay that claim. But in case of claims made policy, if the renewal has gone to some other insurer, we can say, I am not liable. You have not made the claim during my 12 months policy period. So now you go to the next insurer.
Okay. Thank you, ma'am.
Got it?
Thank you. Yes.
Am I clear now?
Yes. Yes, ma'am. Thank you.
Okay. So this ends our Act policy. Now coming to CGL, Commercial General Liability Policy, it is nothing but because this nomenclature was very commonly used in international scenario, wherever the insureds or manufacturers in India were getting contracts from entering into contracts with international entities, they were demanding CGL policy. So Commercial General Liability Policy was launched. It is a combination of product liability plus public liability policy. Public liability is nothing else but general liability plus some extensions. So whatever extensions we have seen, those are very commonly given extensions under CGL policy. Coming to professional indemnity policy, it covers all sums which the insured becomes legally liable to pay as damages to third party for any error or omission committed by the insured while rendering professional services during the policy period, like a doctor, engineer, architect, financial consultant, like advocate, while giving a professional service. If there is any negligence or error or omission causing financial loss to the third party, here third party is their own customers only, not the complete third party, because who is going to suffer the financial loss is their own customers. Then those are claiming financial loss onto the insured for negligence or error and omission in the service, then that is covered under professional indemnity policy. This also includes legal costs and expenses incurred to defend the case. See, under liability policy, the beautiful part is defense costs, the legal expenses to defend the insured himself is a part of claim itself. It is not separately treated as legal expenses for the claim, it is claim itself. And it is maximum liability limit is AOY under the policy. Claim amount plus defense cost both are again subsummed or sublimited to entire policy aggregate limit or AOY limit. Coming to clinical trial policy, this is to indemnify the insured. Who is the insured? The institution or organization conducting the clinical trial, the legal liability arising out of clinical trial. They undertake a trial of a drug on some subjects. Those participants are also scrutinized, examined, and they are given some drug to check the consequences, whether they are in order to as expected for which the drug was manufactured, and then only it comes to the market. So that trial is called as clinical trial, and this policy indemnifies the institution or organization conducting the trial for their legal liability. Merely by being participant in the clinical trial, if somebody suffers subsequently, then he can lodge a claim onto the organization who conducted the trial. And there is an act, Clinical Trial Act. There, the compensation is defined how and how much will have to be given, and that has to be paid. So that is covered under trial liability policy. The legal liability may arise out of death or bodily injury or diseases to the volunteers while undergoing the clinical trial of a product specifically named and covered under the policy. Coming to directors and officers liability policy. This provides cover in the respect of loss arising out of wrongful acts committed by directors or officers while
Excuse
acting in the capacity. Yes.
Ma'am, I have a doubt regarding the clinical trials. So they are actually volunteers who are participating, right? So when they are volunteering themselves, why would we cover the liability?
They are volunteering for trying a particular drug onto their body, but in that
Yes.
process, if they get infected due to infectious injections being used, needles being used, or unclean premises or something like that, or the drug not being administered properly, then they have not volunteered for that.
Okay.
What was expected is a particular standard in administration or carrying out of the clinical trial. So if they, though they have volunteered, it is for that particular drug. So whatever arises out of that drug defect is not covered under the policy, but whatever arises out of the trial portion, that is the services, in fact, services that are carried out by the trial conducting organization, that leads to death or bodily injury or disease, then that compensation is paid under clinical trial.
Okay, ma'am. Thank you.
Director and officers liability policy covers the loss arising out of wrongful acts committed by directors or officers in their normal course of office duties. The coverage is under two sections. Section 1 is director and officers liability. That is, if the claim is individually named, a director or officer is facing a legal notification, it will fall under section 1. And there is company reimbursement. That is, in certain cases, company would protect the director or the officer for the allegations. So in that case, company reimbursement section would trigger. There is one more section called entity cover. If the claim is made in the name of the entity itself, organization itself, then entity cover would provide the coverage for that policy, for that claim. Entity cover entity cover is for organization. Deductible is not applicable to director or officers section, because if individual director gets an illegal notification with respect to some wrongful act he has committed while discharging his duty, his pockets are not deep that he would fight that. So in that case, either company has to protect him, or if not, insurance policy has to protect him. So there is no deductible applicable to director and officer section. But for company reimbursement, we apply certain deductible because company has deep pockets. They can spend little amount and the deductible they have to meet.
Ma'am,
What
please
are the
explain
common
company
extensions
reimbursement once again, please.
Huh?
Company reimbursement.
Company reimbursement are those claims which are lodged on director or officer, but for which company provides reimbursement. Like company says, yes, I will protect you, I will fight on your behalf because you have not done wrong. That means generally when it is the feeling that they have not done anything wrong and company protects. So those claims are fought by the company. That is company reimbursement
Thank
section.
you, ma'am.
And ma'am, what is entity cover?
See, if we take the case of ABC company and there are 5 directors, if the claim is lodged on by taking a name of a particular director or officer, it will go under director and officer liability section. If the claim is lodged on by taking a name of a particular director or a particular event of the company says, I will protect you because you have not done wrong. I will engage defense counsel and I will do all those things. Then company reimbursement section. And entity cover means if the claim is, the legal notification is served in the name of that ABC Limited. Company name itself, not naming particular director or officer. The
Okay.
company itself is the culprit
Defendant.
on whom the allegation is made.
Correct. Okay, ma'am. Thank you.
Excuse me, ma'am. This policy is on discovery basis or occurrence based policy. This
A
DNO.
director and officer's liability policy is generally given on claims made basis only. Because occurrence base would be really, really difficult to maintain the list of directors who were covered at that time, who were present, means who were on the board at that time, officers and all those. So internationally, commonly this is to be given. And for the convenience sake of both insured and insurer, it has to be on claims made basis.
And what about discovery period? I mean, the loss has to be discovered in that period. Whenever
There is no concept of discovery. It is a liability policy. Claim has to be made during the policy period for which we
Okay,
have issued the policy. And the act has to have happened during period of insurance, that is after retroactive date.
okay, okay, okay.
Director and officers liability. Gone back. No, huh. What are the common extensions outside directorship? Spousal extension, heir estate and legal representative extension, EPLI, that is employees practices linked insurance, securities extension, that is pertaining to shares debentures issued by the company, crisis communication costs, regulatory response costs, initial public offering, that is IPO that comes, and new subsidiaries extension for some time when the new subsidiary is formed till the expiry of the current policy, it can be absorbed under ongoing policy if this extension is already taken. Coming to commercial crime policy.
Can you please explain all the extensions in one line?
Huh?
At least we'll have a hint, like all these
Okay.
extensions that are available.
Okay, outside directorship is by being on the board of one company, you are made a director or you are made to sit on the board of some other entity also, and there some claim comes, then that position is also covered under our policy if outside directorship is extension is taken. Of course, see, like New India. On New India's board, one Bank of India director is also sitting because they provide finance to us and so many other things. If a claim comes, or rather the other way, let me put it the other way. The director of New India sits on the board of stockholding corporation. If some claim comes on the Mr. X, who is director in New India and sitting on stockholding corporation, if claim comes in stockholding corporation's director position, of Mr. X, he would say, why I am director there? Because you appointed me on stockholding. I am actually director of New India. So New India should be protecting me. So our policy, if it is taking outside directorship extension, then that position outside the entity which is our insured, that position is covered under this policy. But obviously, the first trigger would be their own policy, and excess liability will come under our policy. Have I explained?
Yes, ma'am. The
Yes,
first
ma'am.
one is
Yes, ma'am.
clear.
Spousal extension is if a director is sitting on a board, some allegation is made, should not happen, God forbid, but it has happened and that has given rise to this extension. That the person died. He got a heart attack and he died. Then the recovery or financial consequences will have to be borne by the spouse for no fault of her or him. Then that if spousal extension is taken, whatever legal expenses he or she has to incur in connection with that claim, those also would stand covered under this D&O policy. Same is the case for legal heir, estate and legal representative appointed for the director. The same logic of spousal extension would go. EPLI is in employee practices. If there is some discrimination, some claim occurs, if this extension taken, then the policy would pay for that. Securities extension is issue of debentures, shares and all those things. If there is something, some claim pertaining to that, that is covered under securities extension. Crisis communication, some situation happens, Satyam like situation, or in some banks we see that the entire board is suspended. Then in that case, some extra cost to meet that crisis may have to be incurred. That is also payable if this crisis communication extension is taken. Regulatory response cost, there are so many regulators working on any particular company like SEBI, CAG, this, that, for insurance company, IRDA, for banks, some RBI. So if there is some regulatory inquiry or regulatory notification that has to be responded to, you cannot yourself write a reply. You have to engage a counsel or an advocate. Then those expenses can be covered under D&O policy. Initial public offering is when they come out with IPO. If there is some wrongful act that has occurred on the part of director or officer, like some mistake in that red herrings prospectus or some accounts declaration or something like that, then that can be covered if this extension is taken. New subsidiary, I think I mentioned that if some new subsidiary comes up during the policy period, suddenly in between they cannot go for taking a new policy, D&O policy for that entity. So that should be covered till the expiry of the policy under the same D&O policy.
Ma'am, please explain the last one once again. New subsidiary.
If new subsidiary is formed or taken over and under the ongoing policy period, then that subsidiary can be covered under ongoing D&O policy.
Okay, now got it, ma'am. Thank you
Such
so
cover
much.
should be covered in DN base policy of DNO, no?
No, read the heading extensions I have mentioned.
Yeah, but
Extensions is
why
some
these covers
extension
are
is
extended?
something.
Such cover should be covered under base policy as well, na? If somebody due to some wrong decision due in IPO, if director had taken any wrong decision, then in that case that the cover should come under the base policy of DNO, no?
Sir, all
I mean,
these extensions may not see IPO does not happen every year. Then why every year this cover has to be given, or it may not happen ever in some organizations. So it is the choice. And actually, frankly speaking, the base cover was developed subsequently as per the need. Additional covers or extensions are demanded by the market, and those are provided by the insurers. Extensions always come into existence depending on the new requirements of the market or new incidents happening which have never occurred to the mind of original policymaker. We can improvise the product and provide additional wordings or new wordings of D&O policy. That can be done. But presently, what we are studying is the ongoing existing format of the policy.
Ma'am, would you repeat EPLI? Would you repeat EPLI?
EPLI, employees practices linked, anything.
Okay.
If there is some allegation relating to discrimination between the employees done by a particular director,
Okay,
or some
yeah.
sort of acts which were not, of course, criminal acts are not covered, but other things.
Okay, ma'am.
What can fall under wrongful act, that is covered under D&O.
Correct, ma'am.
And
Thank you.
the speciality of liability policies is the very first thing what triggers is defense cost. If some legal notification is received, then you have to engage an advocate, no? So defense cost start. So if extensions are taken, then we can consider paying those defense costs. Otherwise, just no.
Yes, correct, ma'am. Thank you.
Coming to commercial crime policy, it covers financial loss arising out of fraud and dishonesty of employees and or third parties. This is just sort of fidelity guarantee only, and computer and funds transfer fraud. So these things are covered. That is the direct financial loss caused to the insured due to dishonesty of employees is covered under commercial crime. And what are the extensions taken or allowed under this policy is care, custody and control, not only the loss to his own funds or stock, but anything that is under his care, custody and control. If that extension is given, then those things also covered under the policy. Then fees, costs and expenses, if he has to engage some specialist and spend for in the event of a loss, then those, if this extension is taken, that can form a part of the claim. Then in the case of investigative specialists. Then money, securities, damage, destruction or disappearance, if it is done by the employee, then that can be covered if this extension is taken. And again, newly created or acquired entities, if it happens during the policy period, those can be covered under the ongoing policy. Coming to last, cyber liability policy, it predominantly pays data liability arising out of breach of data of the insured, administrative obligations, and reputation and response costs. And what are the extensions available? Multimedia liability, cyber privacy extortion, and network interruption losses. Cyber liability policy pays first party losses, that is the expenses which the insured has to incur post data breach, and it also covers any financial liability that might come onto you from third party, that is mostly his customers. In the case of bank, if we are saying, then that liability, data liability arising out of breach of data, is covered under data liability portion. So third party liability, third party financial liability, and first party expenses, these are the two covers under cyber liability policy. Now coming to clauses under liability policies, extended reporting period. It is very commonly allowed as 30 days if the policy is not renewed. The act which has occurred earlier, but the legal notification comes later. If it comes within 30 days, extended reporting period, that is entertained under the policy. Same notification extension clause. Incident has occurred, circumstance is there, but actual notification is given little later after the insured satisfying himself whether it is claimable or not, then that is under notification extension clause. North American jurisdiction extension is nothing but adding USA, Canada under the policy. Cross liability is when there are multiple insureds, like in DNO, all the directors are covered. If there is a claim under for 2 or 3 directors, then one director's claim would not affect the another director's claim. All the claims are simultaneously running under the policy. And a claim series clause is one cause culminating into multiple claims. All claims, because the root cause is same, would be considered as one claim, and only once. Only once the deductible would be applicable and not every time.
Ma'am, for extended reporting period, is it 90 days or 30 days?
It is actually choice. There is no rule as such that it has to be 30 days or 90 days.
Okay, ma'am.
The smallest given is better for us. And nowadays, liability policies, once taken, are generally renewed. So there is no actually applicability of this. There is
Okay,
no specified number on which question can come. It is the choice of the insurer.
Ma'am, whether the defense cost or whatever cost related to proceedings or whatever it is, do we have to consult the insurer, or do we have to take the consent of the insurer? for
When
incurring
the legal
defense cost?
complication comes, the policy, there is right to defend clause and duty to defend clause. In
Okay.
any case, actually, what they have to do is they have to first inform the insurer that such
Okay.
and such notification has come. I am engaging. If it is right to defend clause, they are allowed to appoint their own lawyer to defend the case. I am appointing this and this lawyer, and he would be charging at this and this rate. And he
Okay.
has to take the consent. And after we say yes, then only he can engage him. If
Okay.
he does not do that, there is no bar in his going ahead, but the insurer has a choice whether to honor that portion or to say that you had not taken my consent, I will not pay your advocate charges. I find it unreasonable, or I find that you have breached the condition.
Okay.
Coming to employees compensation, WC policy, workmen
Excuse me,
compensation.
ma'am.
Uh,
Excuse me, ma'am. Hello.
Hello.
Ma'am, I need some clarification. In household insurance, we have 10 sections. But nowadays, we take one more section, personal computers. That means there are 11 sections. Is it so?
Yes.
If a question comes, are there 10 sections, 11 sections? I will have to answer 11 then?
I will have to ask head office for that.
Uh,
Because
one more clarity.
whether they have also modified, we do not know. The exam is
Oh,
common for all 4 insurers.
yeah. One more question, ma'am. I have issued a banker's blanket policy from this year. Am I liable for previous 2 years with the policy which was with other insurer?
How?
We have issued policy from this year. Our retroactive period starts 2 years back. But the policy, those 2 policy periods were with another insurer.
But the loss is discovered during your policy period, no?
Yes, sir. Yes, ma'am.
So we go 2 years back. That is a retroactive period, which is the concept under bankers indemnity policy.
Yes, ma'am. Although it was insured by another insurer.
Yes.
Okay, ma'am.
But had it been discovered, okay, let us stop there. Employees compensation or WC policy, it is designed to indemnify the insured employer against his liability under WC Act 1923, then Fatal Accident Act 1855, common law. Cover is in the respect of bodily injury by accident or disease arising out of and in the course of employment, except those stated under Schedule 3 of WC Act Part C. They are not covered. They are covered under the policy. What is mentioned in Schedule 3, Part C is can be covered by charging additional loading on tariff rates. 50% loading would be applicable. In addition, legal costs and expenses for defense of a claim are also payable. Then there are 2 forms, Table A and Table B. Table A is indemnity under WC Act, amended from time to time, Indian Fatal Act and common law. Table B is indemnity against liability under Indian Fatal Act and common law. Premium is to be collected as per tariff or guide rates as deposit premium. In WC, wages are declared. Premium we charge on that declared amount, and at the expiry of the policy, actually, the premium has to be either collected or refunded, taking the wage register of the insured and ascertaining what is the actual amount of wages which were covered during the policy period. Then medical expenses extension can be allowed for a fixed amount by charging additional premium. Deliberately, I am not giving because there has been change in medical extension amounts, and I don't think examination would cover that part of it.
Ma'am, in WC policy, either of the forms can be given, like A type or B type.
No, what we
Is it
issue
so?
is A type policy.
A
B
type.
type policy is given where the employees are covered under that ESIC Act.
Ma'am, in our case, both sort of policies are covered where the maximum wages for calculation is taken as 8,000, and again, as per the revision,
15,000, no?
15,000. Both sort of covers
Minimum
are
wages
available.
is 15,000.
We have to give as per 15,000.
Yes.
And if it is the renewal of old policy where maximum limit was 8,000, then ma'am?
No, you at the time of renewal, wages also should have been revised, no?
Okay, ma'am.
You cannot renew 8,000 basis policy now.
Because that product
Ma'am,
is still available, ma'am. It is allowing renewal.
It may be allowing, but what is right we have to do.
Yes, ma'am. Yes. Yeah. Thank you,
Ma'am,
ma'am.
when is to give table A or table B? How to confirm? I mean, workman definition, workman has to be confirmed whether they are workmen or not while
No,
issuing the
see, the
policy.
policies are issued as demanded by the insured, and commoner policies for WC are A type only. That covers everything. So now
Okay.
coming to the synopsis of all liability policies, WC policy covers liability toward employees. CGL, product liability, public liability policies cover third-party liabilities for bodily injury and property damage. Error and omission or professional indemnity policy cover financial loss arising out of negligence in providing the service. Director and officers liability, losses arising out of wrongful acts of director or officers of the insured are covered. Crime policy, financial loss arising out of employee dishonesty and computer fraud are covered. And cyber liability, loss arising out of data breach or breach of network security are covered. I think there my slideshow ends. I feel I have narrated enough for miscellaneous and liability. It must have revised all what you studied or read. Of course, beyond this, there are many other products, but those are the products which are much more simpler. Just one reading of the book would help you absorb the details and register in mind. All the best for your exam. Come with flying colors and get promotions.
Thank you,
Thank
ma'am.
you.
Thank you, ma'am. Thank you.
Thank you,
मैम
Thank
ma'am.
you, ma'am.
ये
Thank you.
सेशन इतना अच्छा
Thank you,
कंडक्ट
ma'am.
हुआ है कि इसमें सारे के सारे कॉन्सेप्ट्स इवन हमारी डे टू डे लाइफ में जो हम डील करते हैं दैट इज आल्सो क्लियर.
Please feel free to send me WhatsApp or messages as and when you come across any problem.
Ma'am, I
Ma'am,
just hope
please,
they upload
ma'am,
on YouTube also so that we can
Yes, it
hear,
is put on
matlab, we can
YouTube
have a
also.
quick revision.
ma'am,
Yes.
please
What
share the
slide
PPT.
initial will do? Ma'am,
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 please
what
share the
That
PPT.
PPT also
Ma'am,
could be
please,
shared.
ma'am, please put this on YouTube. YouTube
Yes,
so that we
PPT
can.
पर you send
It is
PPT
going to be put on YouTube tomorrow.
Yes, ma'am.
thank you
Yes.
so much,
Ma'am,
ma'am.
ma'am, there
Yeah.
was one doubt,
Huh?
a query. Actually, can we give a workman compensation policy to the recovery agents, the bank loan recovery agents?
Yes. Because now workman covers all administrative work also, no?
Yeah,
Even
Ma'am,
clerks
What,
can be covered
what is
under
exactly
WC.
definition of workman as per current amended act? I
I
mean,
will read the act and come back then.
no, means I'm asking about the loan
But
recovery agents.
as far as my information goes, anyone who is working is a workman. There is a provision for covering even.
Ma'am, one
many
more
times
thing.
we receive such proposals. Even employees of the organization they ask for workman compensation policy. I
Hmm.
mean the staff which are working under as a in the form of clerical cadre.
Hmm.
So whether we can extend it.
I will again discuss this with MATDHO, and after I become doubly sure, I will come back to you. Please put this query on WhatsApp on my mobile number
Because, ma'am,
or
according
send an
to
email to me
RBI,
so that I can reply.
because according to RBI, they have actually instructed the banks not to, harass the clients with such kind of tactics. Actually, even
Okay.
the credit card companies, they have been instructed not to harass the clients like that. But then,
Okay.
doesn't it become a kind of criminal activity that we are going to support if we give a insurance for such kind of workmen? Those are employed by such kind of banks.
See, business is different and emotions are different.
If that is
individual
what I am
opinions are
saying.
different. What our higher management decides about it, we will have to follow. But
Yeah.
actually, I am not at head office anymore, so I may not be able to lay hands on what is exactly happening on this front. But having you hinted me, definitely I'll try discuss this with head office authorities, or you can also try discussing this with head office authorities at
Yes.
MATDHO,
Yes,
and then share the information, no issue. I will make my effort of ascertaining the correct position about it and come back to you. But these queries I would prefer if you can either WhatsApp or
Yes,
email
ma'am.
to me so that I will not forget.
Sure. Thank you. And the lecture was great, ma'am. Thank you so much.
Ma'am,
Thank
please,
you.
one
Thank
more
you so
doubt.
much.
Ma'am, please clarify that.
Thank you,
Ma'am,
ma'am.
Yeah.
can you
Thank you.
explain
Good night.
jurisdiction clause?
Thank you, ma'am.
Yeah, thanks.
Excuse me, ma'am.
Ma'am, share this slide also, today's slide.
Yes, everything would be shared, slides also, and my speech also
Okay, ma'am.
on YouTube.
Thank you. Good night.
Yeah.